Welcome back to All About Apps. I'm your host, Peggy on Salz, and we're digging into what really matters when you're thinking about driving value for apps and games in the year ahead. Well, half year ahead. Because whether you're building the next breakout hit or fine tuning your monetization model, the path to long-term success is about understanding growth, your revenue strategy, and very, very importantly, and not many are people of thinking about it, your exit plan. So we have today two people who I know and admire. In fact, I am thrilled to be here because we have two people I know, admire, know personally, and what they've built, how they think, it matters, is all I have to say. So let's kick it off first with Evelin. Evelin Herrera. Hey, you will know Evelin maybe from all the events she goes to, but she's also a very seasoned M&A advisor who brings investor lens to everything she does. She has a rare talent truly for spotting value before anyone else does. You're a connector at heart, Evelin. You're obsessed with the app industry, and we are too. So it's great to have you. And of course, you have a front row seat to all the mobile deals that shape the market. And when you're not finding apps and helping apps find buyers, well, you're also helping founders make smart exits. So loads of praise, no pressure here, Evelin, but you are who you are. And we have to welcome you like that.
Thank you, Pei. I appreciate it a lot. It's so exciting to be here. What you said, I'm obsessed with the industry, and I think making it to this point of being talking with you, it's just crazy. So thank you for having me.
Well, I'm happy to have you. And of course, Ömer, because Ömer Yakabağı, you are a mobile growth and monetization strategist. You have deep roots in gaming and app marketing. You have an amazing communication strategy yourself with your newsletter, helping us understand and what you're doing in the space, scaling big names and finding out what works in 2025, because that's what we're here to talk about. So you're a perfect, perfect fit. Great to have you.
Thank you so much, Peggy. Definitely, it will be a nice chat. And as you also mentioned, it's what I have been doing for quite some time, like just trying to support the industry, what is hot, not just in M&A market, also like what is trending, what is shifting in, especially I'm more on the mobile gaming side. But yeah, it will be a cool chat, definitely.
Oh, absolutely, because we have our third person, my co-host, Faheem Saiyad, AppSamurai, one of the sharpest minds in ad tech and a strategist who's the person you guys and app founders are calling when they want to scale fast or get serious about showing value. So again, Faheem, great to be back together with you.
Same here, Peggy. You have had multiple different episodes throughout time, but this one is a bit different, as you mentioned. Kind of comes full cycle all the way from growth, acquisition, M&A to an exit. So quite excited to see what we discussed with Evelyn and Ömer here.
Yeah, and as they sort of made the point, I mean, you have to think of this early on. So if you're tuning in, you're like, what do I care about an exit? You care a lot about an exit because exits are back and the bar is high. And you have to think about this. But Evelyn, I'll start with you, right? What kinds of apps and categories are attracting the buyers in 2025, getting them excited about? And what are you looking about? What's the first thing you're looking for?
Yeah, so health and fitness, photo and video, and utilities are the most predominant categories coming from buyers. And what I hear from them is that you have higher retention metrics, higher conversion, and some of them are just easier to manage and maintain, like utility apps. It's not that you need to be like the sexiest app in town. You just as long as you can provide that feature, you can scale the app. So those are the three categories that I see very predominant. And then in terms of what is important, profit margins is one. Like it's good to scale, but now 21st century, there are many new ways of distributing your app, like TikTok, for example. So profit margins are getting higher. So as you mentioned, Pay, like the bar is getting higher, and that also applies for profit margins. Like buyers want to see better profit margins. The distribution engine, it's also important. I also see that like these new channels being relevant for them. And then if you can have a unique value proposition in your app to make you different, because also with AI, now there are so many more players, like maybe 10 years ago or 5 years ago or even 1 year ago, you needed to be like a good developer to launch an app. But now with AI, anybody can launch an app. So the app store is getting just more crowded. So you really need to have something different. And again, this can be profit margins, a good distribution engine, a unique value proposition, a good web to app funnel, um, your brand to be the favorite one inside of like that specific niche. So many other things, but those are like top of my mind, what I see that they really appreciate, and like they open their eyes when we mention that we have some of this.
Wow. So diversification, very important in the channels, but one I wasn't expecting. I mean, I know retention is important, but now that it's a metric that the investors are interested in. So let's go to you, Omer, about that, because as a growth strategist, you're helping companies grow what matters, the metrics that matter. So the signals you're looking at when you're advising them about growth and attracting investors, what are they? And I guess the other question is retention among them?
Thanks, Peggy. Sure. So I would say when a founder tells me, okay, we are thinking about an exit of our game or app, the first thing I usually ask is always, if it weren't yours, if you were the VC, would you buy this game? And that shift alone changed the conversation a lot, because like suddenly it's not about the download directly or hype. It's more about core basic fundamentals, because from retention to profitability, there are lots of things to think about. I would say this year buyers are way more focused, and I would also say even anxious, because they would like to go for more guarantee shots. Back then it was way easier to scale. This CPI crisis wasn't here and there. So I would say right now they are asking like the core questions, basically. Is it scalable, like CPI wise? Is even the growth engine efficient? And of course, like they're also like obsessed about how about the IAA, IIP, even like subscription, like season pass, etc. Like from my side, what I look first is like clean CPI to LTV ratio, like most of the people. So not just we are growing fast. We got 10 million downloads. Like all of them are kind of like not making that much sense. So the answer should be, hey, here is the data, and we are growing efficiently, very solid. And then I would see monetization maturity, whether it's IAP or subscriptions. Are they all optimized, or are they still early and figured out? That's really important. And another big one would be actually, as Evelin said, I have had to say it in the past, but retention versus UA is really crucial here, connecting the dots here, because like acquiring users is easy, not easy, like doable. Of course, like if you burn money, you can do it, but harder to keep going up, and also harder to keep the user. It's also getting harder because of the so many campaigns, aggressive strategies. So if the studio, or like if the game or app is managing it well, it's a clear sign of product market fit, and it's something really, really important for the investors. So finally, I would say personally, I pay close attention to UA creative processes setup, because it's the hottest topic right now from the growth UA side.
You did make a very interesting point about optimization. What are we optimizing toward? And also, it's about the long haul. It's not about the top of the funnel. Now, if I look at what you do, Faheem, you are the one in the room, possibly also in the DMs, right, where founders are saying what they're optimizing for, what they're thinking about. How's that changed? How are teams planning for growth, particularly now when we're thinking about it being full funnel growth, and they're thinking about ultimately the exit?
Exactly, Peggy. One thing that the whisper has definitely changed as well. A few years ago, you might have seen, right? There was a grow at all costs and then figure out the business model later kind of approach. A lot of studios, apps did that and got some good money, especially in the post-pandemic boom. But now it's all about, how can you basically grow with a proper strategic value, because the founders these days are much more looking either at a dead end. Hey, the VCs are not deploying capital, so the capital is still there, the M&A market is still very, very hot. But what has happened is the premium is being given to the founders that have actually built not just a growing business but also a profitable, a defensible business, right? Because in the long term, what the investors realized was a lot of this high valuation was not coming back with their promised LTVs. And since the assumption game was all in, these days we are seeing much more of a strategic approach where the M&A and the LPs and the VCs are like, hey, we have the cash, but before we deploy that cash, you need to actually show us where exactly are you scaling that user base as well. So that's where kind of we have seen the founders take a different approach all the way from the way they build teams as well. Because these days, of course, the number one driver for strategic value is still AI. Now, in the mobile app business, we see a gold mine of talent and data. The talent in the industry is way ahead compared to the talent from other industries, and the data is much more critical as well. So even a simple example of that is, let's say, a niche fitness app, for example, could have a lot of data regarding user behavior, workout patterns. With the right team, you can just take that data and design an AI health coach, right? So this basically reduces the way you use people but increases the way you use data. And that is where we have seen founders pivot into an angle where they're leveraging data heavily to make sure that this AI wave is something they can use in a day-to-day aspect as well. And the other aspect that people often miss out, but the sharp founders that we have seen do some good exits have not missed on, is privacy. So when people think of privacy, many people think of it as a barrier with the scan ad network. It has limited the way we can track, the way we can grow, etc. But on the other side, the founders that do see it as an opportunity use it as a way to build a loyal community, right? Use a way to, let's say, increase the way the opt-in notifications work, or a transparent privacy policy that the Gen Z, the Gen Alpha that actually pay attention to these kind of things are actually focusing on these things. So once you have built this, you are a solid product for an M&A candidate, because your privacy first growth strategy is now basically your exit strategy.
Absolutely. And to the point on privacy, that's also about growth, because if you look at the other side of it and you look at about making those really exciting deals with brands and other partners in the ecosystem, you have to have that data. It has to be opted in. It won't go any other way. I mean, that's what I know and hear in the industry as well. And what we're also hearing is the metrics, the metrics that move the needle, they change. Faheem, you talked about it, Evelin as well. It's ROAS, retention, LTV, but that's what we're looking at when we're looking for growth. What about the needle when it comes to valuation? And I'll start with you, Evelin, because you're talking closely with those investors and founders as well.
Yeah, so what I see that it's important, it's again profit margin that really moves the needle, because you have so many products that provide the same function for the users, but that can be one of the big differences in terms of metrics. Yeah, I will say outside of the main marketing and monetization ones that we mentioned, profit margins is one. And then this is outside of metrics, but how can they run the app? What is needed to run the app? And like many of these apps have unique distribution strategies that only the founders or the small team could unlock. So buyers, they are big companies usually. So they wonder how they can take that growth system in-house. If they need to do an aqua hire, if they can replicate the system, if they can also acquire the system. So yeah, this is outside of metrics, but also relevant when it comes to making an evaluation. Because essentially, if you can buy, but if you can sustain the growth, it probably is not going to be a good target for you.
That's probably very key also when you have apps and games that have grown through community and through even the founders getting involved in the UGC. So that very interesting new perspective there. Ömer, what about yourself? You're also talking, and again, it's about those metrics that move it for valuation. I mean, gaming has a lot of exciting metrics because of all the data that is collected there. What is standing out?
Exactly, and it's way more dynamic, so not much you cannot get standardization in just like non-gaming cases. I would say for me, first would be payback period. It's like
Okay.
big issue and even going bigger and bigger. Like buyers always want to know the ROI very quickly. Like how fast can this game return my investment? So if you can recover CPI in like 30 days, that's incredibly attractive. But it's not just about how much you make; it's like how fast you get it back. So that's pretty hot issue. And apart from that, in the bigger picture, the investors, just like Evelin said, they are big companies, not like a random rich person. So they would like to see how can they integrate this to their internal tools. Maybe they are puzzle masters and developing in this way. Maybe they are in-app advertising master. So the game must be more IAA. That's why I would say it should align with those small details as well. And I would say apart from that, we chatted about retention. It's important here. So
Mhm.
retention with monetization overlap is an issue. So it's not just day 30, 20%, 10%. The real signal would be how many of those high retained users are actually actively spending or engaging with ads. So
Mm.
these metrics are pretty important. And according to this, the evaluation, the decision will be made, because the idea is really simple. When the, let's call them as publisher or investor, when they are sure that if we buy this with our internal systems and know-how, we can double.
Mm.
So if the answer is no, it's already saturated, then no, the game is already dead, although it got 100 million downloads, or it doesn't make sense. I would say the last one here for me would be, one that often gets overlooked is ARPU growth over time. So if your
Mhm.
ARPU flatlines, it tells a story. So if it increases month over month, even slowly, that shows the monetization depth and potential scalability. That would go, align with the investor perspective. It matches, and okay, we buy and we double this. I would say,
Mhm.
yeah, that's all so far.
Because there needs to be mileage in those metrics, right? They can be very impressive, but where are you going to go from here? What we're hearing, Faheem, is the signals, they have shifted, but what hasn't changed is how important they are. But sometimes the KPIs, they're often misunderstood or even misused. I mean, we have moved on from vanity metrics. So, how are you helping teams avoid that data trap, going after the wrong metrics that maybe hurt the scale or even their appeal for being acquired or attracting investors?
That is a very good point, Peggy. And this is the reason why many of the deals get into trouble. You use the term that I love, vanity metric.
Hmm.
That's basically those flashy terms you see on the pitch decks, those big numbers, 1 million downloads, X million, this, etc. But when you scrutinize the deck, it all shambles down like a domino effect. And that is a mistake that many early founders do, be it a gaming or a non-gaming app. But the moment you ask us, okay, you have 1 million downloads, but what's your day 30 retention rate? What does the acquisition channel look like? That's when kind of things start to get a bit messy, and that is where the actual valuation is pop up, because you see the churn that they're experiencing at a crazy high rate as well. Another thing that we see and people use a lot is daily active user, monthly active user. Now these things look good on paper, but ideally, if you hear that the daily active user and the monthly active users are very, very high, it basically shows that the stickiness ratio is terrible, right? It basically is a revolving glass door effect where the users are just revolving around, but they're not a loyal and engaged community. So when the teams that are entering this realm start to realize that daily active user, monthly active user, and these are all terms that they need to know about, but not use it as a North Star metric, that's when kind of the team setting, the planning, the KPI set apart is where it makes life easier for them as well. Because at the end of the day, any acquirer, any VC wants to buy a predictable machine. Everybody wants data backed numbers, right? And to this day, of course, the LTV to customer acquisition cost ratio is something that is an industry standard. I mean, the magic number is at least 3:1. Anything less than that for the LTV to CAC ratio is basically unsustainable. And many investors, many acquirers use this as a metric, which is quite like an industrialized metric as well. Of course, your retention rate, your stickiness, they need to add up as well. But one common thing is that Evelyn and Ömer touched on is the conversion rate in your core funnel. once the user walks into your product, your app, your fitness app, or your game, and from the aha moment all the way down to the monetization moment, what is your conversion rate, right? So this is a metric that can also help you design the flow around which you can play your evaluation. Because again, at the end of the day, right, these are the people that love numbers, right? So if you walk into a room and you show clean data, that is what you are selling. Basically, you are selling a de-risked asset. Once the asset is de-risked, that basically gives you a premium valuation that any startup founder would seek.
Mm-hmm. And across that funnel, what we're seeing more and more is it is about the creative. It's what brings you in, it's what keeps you there. If it's all about engagement and retention and being sticky, that gets down to the creative strategy. So we agree it's not about installs anymore. It's the impression, the first impression for an investor or an acquirer. What are they getting? So I'll come over to you, Ömer, because you've mentioned it before. Creative is a value driver, but when does it go beyond clicks and start signaling real growth potential? I mean, it's great to have a cool creative. UGC is full of it. We get excited, but that can be a bit of a mayfly. It comes and goes. When is it real growth?
Yeah, this is actually a fun one because I think we have finally moved past the idea that creative is just about lowering the CPIs. No, like literally today, creative is kind of your business card, not just for users, but for investors, publishers, acquirers too. For me, I would say it starts signaling real growth potential when it does two things. First, it must reflect a repeatable system. So, like, imagine you see 5 different ads and they are all winners across different geos, audiences, and it tells that you are not guessing, you nailed it. So you have already built a clear pipeline, and you know. So I would say that's scalability, and that's the main answer here, because you are not lost with hundreds of different ads and testing, iterating again and again. So second would be, and last one, you must showcase product market resonance. Same for gaming and non-gaming as well. So if your creatives feel native to the audience, you speak the same language. So that's growth NDA basically.
Yeah.
If I see creative strategy that brings in high quality users consistently, okay, that's strong creatives tells a story, and great stories sell, kinda. And I already saw this scenario a lot in mostly non-gaming, even better. So yeah, maybe I shouldn't share the samples because of privacy, but yeah, lots of examples over there.
Okay. So it's about telling that story, and that's what it is. I'm hearing that so often. Gaming companies, as well as non-gaming, thinking about building the brand voice. Evelyn, we think it's important. We know intuitively it's important, but how much weight do investors really give to the brand narrative, the identity? When they're reviewing a deal, are they saying, yes, the story is the deal maker?
This is very interesting because if you have a good branding, they can fall in love with your app besides any PNL that we can share. So even if the PNL is not as good, but they love your app, they love your product, they can move forward with a deal. And I think in terms of brands, you can have two different types of like positioning your app. And this applies maybe for non-gaming more, but you can be like a top app on the category, and this is like number 1 to 50. Like we all know Strava, All Trails, the main apps in each one of the categories. We might not know the 100 plus, but if they solve a very specific problem and they are very well known into the niche, I think that's another way of like positioning your brand. So to recap, you can be like a main app that everybody knows, extremely mainstream, or you can be not mainstream, but you're the best one and the number one into your niche with everything that is like fishing, skiing, surfing. These are good examples of like you can be really well positioned and really monetize that. Yeah, and I think the creative also speaks a lot about the team and how many creative ideas they can come up with, because you can find like one winning message or one winning hook and like repeat that over and over with different like setups. But it's also about finding new ones, because that one can get old, the trend passed, the users are already tired. So it's also about how creative the team can be in coming up with new ideas. And that also proves to the investor like this is a product that they want. We're just like changing the way that we communicate it to the different audiences. based on
Mhm.
trends or algorithm.
It's interesting. So we get from velocity to value in a way, Faheem. And I'm sure that you're seeing this as well. Creative strategy has to evolve. How are you seeing it evolve? Because again, in M&A, I'm saying, oh, I'm getting this value, but I want to scale it. So how does creative strategy evolve to support scale?
Definitely, Peggy. One thing that Evelyn said, I'm going to add to that as well. So when you have a nice branding, when you can talk to the people, when you can signal to the investors that you can get your audience, that basically is a tangible asset which can actually increase your evaluation, right?
Mm,
Now, when you look at a ledger sheet, right, the idea is that everything that is revolving around finance adds to the valuation. But at the same time, if you are able to use your creative as an asset, this can be your non-financial asset that you can bring to the your negotiation table, that can actually help you justify a higher valuation and bridge the valuation gap that is basically stalling so many deals. Often founders have a vision, they have a valuation in mind, the acquirers, they don't kind of agree on that deal. But when you have these kind of non financial assets, they can add in to help you bring that to the table as well. And one thing that we have seen is that various in the ad world, we have seen this a lot of the M&A deals have happened around creative agencies, right? And these agencies all had a very scalable branding strategy, be it by the use of UGC, be it by the use of AI, be it by the use of non-fundamental concepts as well. As long as you bring that asset value, the scale is quite increasing as well. Because what happens is, at the end of the day, the acquirer is not just buying your user base, they're actually buying your brand's reputation as well. And as long as you can pull in a user, you can tell a story with your creatives, that is an evidence of the value that you can definitely use to bump up those valuations as well.
And as you said yourself, part of the value is that you are connecting with that audience through the creative. And I want to stay with that because that connection, that matters. That is value, and investors will pay for it. If we look at Gen Z, Gen Alpha, they are reshaping how products are designed and how value is perceived. They want to maybe work with the product. In gaming, they want to influence the gameplay and influence the story. Let's talk about how that's impacting product market fit. I'll start with you, Evelyn. This particular audience, that is a very different aspect and asset for an investor.
Yeah, I think product market fit is changing a lot. Like maybe before you needed 1 year to prove like PMF, then you needed
Mhm.
months. Now you can do it in weeks or even days. There's
Mhm.
like this huge concept of building in public. There are tons of influencers launching their own apps.
Yeah.
So there are like many new ways of introducing your product into a market and validating that it's gonna work. There are even some founders of apps creating like fake landing pages where you pay and then they refund the money like right away. It's just to see if the user actually completes the payment. And this is like a web to app funnel. Uh, so I find that there are tons of new ways of proving that you're gonna make something. And I think the metrics that we were seeing for the past 4 years were too repetitive. But now we're seeing new ways of finding value in different apps. So like distribution and user base and engaged user base, even if you don't know how to monetize it yet, it's an asset that is very valuable because then you can cross promote, you can use it for brand placement, like you can do tons of things. So there's not only one way of evaluating PMF from my perspective, and also on the M&A side, you can find like a strategic buyer besides a financial. So even if your financials are not the best one, you can still find a strategic buyer that is going to appreciate your product per se. So I think PMF, the concept is like, I understand why they use it for like BC and so on, but I think now these days is applying more for like B2B SaaS. If you go to like Silicon Valley, yeah, you need PMF. But for apps, just man, go and launch on Twitter, launch on Product Hunt, and you're gonna see like within 48 hours if your product is gonna be interesting or not. And probably if not, you're gonna understand also why, because they are gonna tell you, I didn't like the onboarding, I didn't like this feature is not working well. So I think now it's about like moving fast, breaking things, and connecting with the users across all of the channels.
Mhm. That makes sense because everything is changing so quickly, particularly with this audience. Then, what we're thinking of and the runway is very different. This is moving fast, and this is moving so quickly that maybe we blend our metrics. We come up with different metrics and measures. What's it looking like for you, Omer? Because you're focused a lot on gaming, and that's where change is massive and volatile at the same time.
Exactly. Like there is definitely a massive shift, and honestly, older strategies just break down. I would say, especially for Gen Z and Gen Alpha, they just don't expect value. They expect now instant clarity and emotional relevance from the first second, like social side, etc. And to be honest, it's more about being experiential. I was even yesterday reading Dentsu 25 gaming trends, like found lots of interesting things about Gen Z. Like it says 32% more likely to play for just socializing. And 1.6 billion friendships formed monthly on Roblox, and many more crazy data. Like I would say it's just something new that we have to realize, and it's changing the focus on Gen Z, and it will affect the creatives, targeting, retargeting, like all the things one by one. In terms of product market fit, I would say uh, personalization should be the new baseline, considering all these new information on Gen Z and Gen Alpha. So these users grew up by customizing everything from their like TikTok feed or even like Twitter. So if your product doesn't adapt to them quickly or doesn't feel like it, it sees them, it's a bad fit and it will not work. So from investor side, it's like really important to make it clear, okay, product market fit today is aligning with this one, so we are not throwing our money to a random spot. We know the game that we are playing. Yeah, I would say so.
That's a very interesting message, Faheem, because that says, adapting is everything. We knew that before, adapt or die. But now it's important to do that throughout the cycle of the app. And you're working with growth teams. I mean, how are they shifting? Because now it's not just about uh, being successful. It's about adapting and changing constantly. And even bad data is good data because at least you know what people don't like.
Because this is a very key question, Peggy, especially for any app owner that wants to have sort of like a long-term value. You can't just build for millennials anymore, right? You need to build for the Gen Z, the Gen Alpha, and these generations have completely different expectations, and that's where you use data to analyze and deliver as well. Something that Evelyn added to on as well, a simple example of onboarding. An onboarding sequence cannot be minutes anymore. It has to be a couple of seconds at max, because both the generations, like it or not, they have a very limited attention span, owing to TikTok and all the good stuff. So that's where you don't expect them to complete your typical onboarding scenario as well. I mean, for Gen Z, personalization is a massive key as well. They like to feel understood. So when you open an app, you ask them a few key questions, and based on the answers you personalize their journey. For Gen Alpha, it's more about gamification, because these are the generations that have grown up with tablets and interactive games, so they expect to play their way through the onboarding, right? This could be progress bars, interactive tasks, etc. And that's where what we have seen emerge over time as well. From a monetization perspective, something that these generations are very well aware of is the traditional ads, paywalls, offer walls, how the rewarding mechanism works. Now, this can be used to a massive advantage as well, and that's why the key winning model right now, be it a game or a non-game, is the freemium model with microtransactions, right? Because the users are more than happy to pay for cosmetic items, virtual goods, etc., but provided that they have been onboarded in a right efficient manner. Now, for somebody looking to acquire this sort of app, they see this as a strong revenue stream, and hence this will basically align with the revenue goals down the line as well. And one final thing that we have seen a boom in is the rewarded video ads, because nobody likes intrusive ads. So these young generations that know that, hey, there is a unit in the app where if I click, I will be watching an ad, but I'll be getting paid in return. So that's why we have seen a massive acceptance rate on this, which has basically changed the way hyper casual games move to hybrid genre, and hybrid games bringing in rewarded ads. So that basically was all revolved around to accommodate the Gen Z and the Gen Alpha generations.
And that also goes around in a circle, I think, Faheem, to engagement, because if we're looking at engagement and focusing on that, then you're engaging with rewarded ads that don't feel like rewarded ads.
Exactly, because once you are the thing about the rewarded world is it is a very notion that makes them feel a part of it, right? These are personalized, they are intuitive, they are not intrusive. So that's where you can actually get them assured that, hey, when I ask you for your engagement, when I ask you to kind of review me in a certain manner, it could be as simple as asking them for a store review by giving them certain coins, certain gifts, etc. And these kind of things can definitely be taken down all the way from onboarding to even getting them to publish an app review, which will be very organic. They will do that for the reward, but the authenticity of the Gen Z and the Gen Alpha is they just cut through the BS. If they like the app, they like it. They don't like it, they don't like it. So they're gonna be upfront with you, and the added incentive is just to compensate them for their time, if I may.
Well, it's fascinating to hear what changes and what shifts here as the value focus shifts. It's not just about the vanity metrics. The millions of downloads, no one's interested. Are they staying? Are they engaging? For example, as Ömer pointed out, they want to be a part of the game and also build that value with the app developer, which is what you brought up as well, Evelin, talking about what the value is. The value is the story. The value is how it's perceived. And we have valuable insights here because we've learned now, we've covered the path with you, how to grow your app, signals you need to look for, and of course, how to get ready for a smart exit. All of that coming together with you. So I'd like to thank each one of you for being here, providing insight, straight talk. Ömer, Evelin, Faheem, great to have you.
Thank you so much, Peggy. It was a pleasure to be here. I'm glad to be on the same table with Evelyn and Omar.
Absolutely.
Thank you.
Likewise.
I was going to say, and it's one of those panels that you want to continue. So maybe that's what will happen. But in the meantime, to our audience, well, of course, thanks for taking the time to tune in because your time is valuable and you spent it here. So whether you're scaling up your app, shipping it out, whatever you're thinking, you have to be thinking about the exit as well. And you should be thinking about hitting subscribe so you can stay with us and don't miss what's next. Because as you can see, the whole series is about sharp takes and standout guests, and more of the same are coming soon.